Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Wednesday, July 12th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's get to that. Tonight we've got a packed episode for you. First off, we're going to be diving into the latest move by U.S. Senators Cynthia Lummis and Kirsten Gillibrand. This move is shaking up the crypto world with a new oversight bill that could change the game for crypto exchanges and stablecoin issuers. Then we'll jet off to Europe to explore the European Securities and Markets Authority's new proposals for crypto companies under the MiCA law and the EU's ambitious, quote, Web 4 and virtual worlds strategy. Back in the US, we'll discuss how the Senate Finance Committee is reaching out to the crypto industry for guidance on tackling the tax issues and opportunities that digital assets bring. From there, we'll head to India, where the Reserve Bank's Deputy Governor, Ravi Shankar, has voiced concerns about the potential threat of stablecoins to policy sovereignty. Next, we'll take a look at Russia's digital currency project, the digital Ruble, which is moving closer to becoming a reality. And finally, we'll explore how the U.S. Government Accountability Office is investigating the potential of blockchain technology to improve the oversight of programs run by the Small Business Administration. So buckle up, hit that subscribe button, and let's dive in. While Bitcoin prices remain flat, U.S. Senators Cynthia Lummis and Kirsten Gillibrand are making waves. They're rebooting a crypto oversight bill that could change the game. This bill would put the Securities Exchange Commission in the back seat, instead requiring crypto exchanges to be overseen by the Commodity Futures Trading Commission. Stablecoin issuers would also have to be regulated depository institutions. This is not the first time these senators have tried to push through crypto legislation. Last year, they introduced a bill that didn't make much headway. Editor's note, we said at the time that the bill had no chance of getting through. And that really wasn't the point of the bill at the time, but it was valuable because it was a starting point to the conversation. Now back to the story. Because the bipartisan pair is not giving up. In fact, this new bill is their most ambitious effort yet. It aims to draw a clear line between securities oversight and everything else in the crypto world. The bill proposes that assets that don't give the investor a financial interest in a business should not be considered securities. This means that those issuing cryptocurrencies would have to disclose to the SEC twice a year. But as long as their tokens don't represent debt or equity, they would stay outside the reach of Chair Gensler. The bill also proposes that most crypto tokens would fall within the CFTC's commodities space. This would give the CFTC power over crypto trading. Both the SEC and the CFTC would receive equal funding and have an equal hand in a new self-regulatory organization for crypto. Now, let's talk about what this could mean for the crypto industry. Because this bill proposes strict rules for customer asset segregation and risk management standards for crypto lending. It outright bans rehypothecation, which is when a crypto firm uses customer assets to stretch their own credit. They loan out their customers' money as if it were the company's capital. This comes after several crypto platforms declared bankruptcy because they loaned out or used customer funds and then couldn't honor withdrawal requests. The bill also has implications for stablecoins. It proposes that only banks or credit unions regulated by the state or federal government can issue stablecoins. Existing issuers would be allowed to get newly established licenses for this role. The senators are also pushing for a definition of decentralized finance that sets rules for when a software project becomes a more centralized business effort and needs to be registered as an exchange. While the SEC has been aggressively enforcing existing securities laws on prominent crypto companies, this bill could change the landscape. But it's not a done deal yet. The bill needs bipartisan support to pass, and it's unclear when it will be put to a vote, if ever. Bipartisanship is in short supply these days, especially on Capitol Hill. The bill also proposes some significant tax benefits for crypto investors. They would not be taxed on crypto that they get from mining, staking, forks, or airdrops until they pocket the new assets. And any crypto payment buying goods or services for less than $200 would get a tax exemption. Because who wants to pay taxes when they're using their own money? Now, my take on it, this bill could bring significant changes to the crypto industry, but it's still a long way from becoming law. As always, we'll keep you updated on the latest developments. Their biggest issue, in my opinion, is that neither Lummis nor Gillibrand are on the actual Senate Finance Committee. That might make moving this bill out of committee a little more difficult. Speaking of regulatory changes, let's take a quick flight over to Europe. But before we do, don't forget to hit that like button and subscribe to our podcast for more crypto news. Now, let's see what's been happening across the pond. The European Securities and Markets Authority, ESMA, has issued a set of detailed proposals for crypto companies in the EU. These proposals, under the Markets in Crypto Assets Regulation, outline how crypto firms should handle customer complaints and manage conflicts of interest. The MiCA law takes effect in 2024. It allows wallet providers and exchanges to operate across the EU with one license and sets reserve requirements for stablecoins. The ESMA is also seeking confidential information about crypto companies' expected revenue, number of white papers, and the use of on- and off-chain trading. The agency plans to issue more consultations in October, covering sustainability and record keeping, with a final batch due in early 2024. This final batch will consider when crypto counts as a security and how foreign companies will be able to serve EU clients. The European Banking Authority urged stablecoin issuers to start prepping for those new EU rules, even though they only take effect in June of next year. The EBA wants to encourage timely preparatory actions to protect consumers and reduce the cliff edge for companies on June 30th. Issuers of e-money tokens tied to fiat currency and of asset reference tokens linked to other products should start adhering to MiCA's high standards of disclosure to potential users sooner rather than later. The EBA released its first set of measures for public comment to clarify the MiCA requirements for the issuance of a stablecoin. They contain clauses like a perpetual right of redemption and guidelines for managing complaints. The EBA officials anticipate a surge in stablecoin issuance over the coming months and have urged businesses to use its guiding principles on good governance and risk management before the necessary restrictions are implemented. The EU has unveiled a Web4 and virtual world strategy. This strategy from the European Commission aims to create Web4 and virtual worlds reflecting EU values and principles. The Commission defines Web4 as the convergence of artificial intelligence, the Internet of Things, blockchain, virtual worlds, and augmented reality. The bloc's strategic plan aims to nurture local Web4 businesses and to be a global regulatory standard setter. This strategy includes support for EU enterprises with a program called the Partnership on Virtual Worlds under Horizon Europe. This program is focused on fostering an industrial and technological roadmap for virtual worlds. The statement also described two new Web4 public authority initiatives: an immersive urban environment called Cityverse, used for city planning and management, and the European Virtual Human Twin for modeling clinical decisions and personal treatment. The bloc is concerned that its domestic technology will be outpaced by developments in the US and China. A report linked to the statement highlighted US companies working on metaverse technology, including Meta, Apple, Microsoft, and Nvidia. It also pointed to developments in China with Alibaba, Baidu, NetEase, and ByteDance progressing their metaverse strategies. From Europe, we're heading back to the US, where the Senate Finance Committee is seeking some crypto wisdom. But hey, if you're enjoying our journey so far, don't forget to follow us on YouTube or your favorite podcast platform. The US Senate Finance Committee is reaching out to the cryptocurrency industry for help. They want to understand how to tackle the tax issues and opportunities that digital assets bring. The committee is led by Chairman Ron Wyden and Ranking Member Mike Crapo. It has put forward a set of questions on 9 topics. These topics include loan of digital assets, wash sales, and staking and mining. The committee is trying to figure out how to classify digital assets under the Internal Revenue Code of 1986. This code currently differentiates between different types of property, but it doesn't have a clear category for digital assets. This lack of clarity is causing complex reporting issues for taxpayers. The committee is collecting responses until September 8, 2023. This move by the Senate Finance Committee comes after House lawmakers last month urged the Internal Revenue Service to release planned crypto tax rules. The goal is to bring the industry into full compliance. In April, an IRS official mentioned that they hope to have a new operating plan for dealing with cryptocurrencies within the next year or so. The committee's outreach to the crypto industry is part of a broader bipartisan effort to address the intersection of digital assets and tax law. It's a complex issue, and the government is seeking input from those who are most familiar with the technology and its implications. This could be seen as a positive step toward creating a more defined regulatory framework for cryptocurrencies. However, it also highlights the ongoing struggle of traditional institutions to keep up with the fast-paced evolution of digital assets. From the US, let's jet off to India, where stablecoins are stirring up some controversy. The subject's come up quite a bit tonight, so it's no surprise that stablecoins are causing a stir in India. The Reserve Bank of India's deputy governor is Ravi Shankar. He believes they pose a serious threat to policy sovereignty. This is a big deal because policy sovereignty is the power a country has to control its own policies. This information comes to us from a local media outlet after Shankar spoke about this at an event. Because Shankar thinks that stablecoins are only useful to a few countries. He sees them as beneficial to economies like the US and Europe. These countries have currencies that stablecoins can be linked to. But in India, Shankar fears that stablecoins could replace the rupee in the local economy. This could happen because the government's profits from issuing currency could go to private players. Shankar also worries about dollarization. This is when a country's economy becomes dependent on the US dollar instead of its own currency. If stablecoins are linked to another currency, like the dollar, this could happen. Shankar believes this could impact India's capital regulations or monetary policy. The G20 has also expressed concerns about stablecoins. These economies have major worries about them. The regulation of stablecoins has become a contentious issue between the G7, a group of advanced economies, and the G20. And in that context, Shankar's comments confirm the G20's concerns. The G7 has said that its nations will follow the Financial Stability Board's recommendations for stablecoins. These recommendations are expected this month. They focus on how the use of stablecoins could affect financial stability. And when I hear news about them, you know I'll be bringing the news to you right here. On the other hand, the G20 wants to follow a synthesis paper. This paper is being produced by the International Monetary Fund and the Financial Stability Board. It will be released later this year. It's supposed to take a more nuanced look at the issue. Despite these concerns, Shankar believes that central bank digital currencies are a better solution for every country. He sees them as more stable than stablecoins, which is okay. He has the right to be wrong. The world of crypto is full of different viewpoints, and that's what makes it so interesting. From India, we're off to Russia. But before we dive into the world of digital rubles, remember to hit that subscribe button. Russia's digital currency project, the digital ruble, is moving closer to becoming a reality. The State Duma is the lower chamber of the Federal Assembly of the Russian Federation. They passed the digital ruble bill on July 11th. The legislation is now headed to the Federation Council, the Assembly's upper chamber. If it passes there, it will go to Putin's desk. The bill was last changed in June. It sets the legal definitions of platform, participants, and users. It also lays out the general rules for the central bank digital currency system. The Bank of Russia will be the main operator of that system. They will also be responsible for all the assets stored in this system. The digital ruble is meant to be used for payments and transfers. Individual customers can use it for free, but companies will have to pay a 0.3% of the payment amount. The bill was first introduced to the State Duma in December 2022. It passed its first reading in March 2023. In February, Gazprom Bank warned about the potential risks for banks if the switch to digital money happens too quickly. The Russian branch of McKinsey, a consultancy firm, estimated that traditional banks could lose around 250 billion rubles. That's about $3.5 million. And that loss could happen over the course of 5 years because of the CBDC. But the firm also estimated that retailers could make a profit of $1.1 billion every year. Olga Skorobogatova is the deputy chamber of the central bank. She said in a recent interview that the digital ruble will be available to all Russian citizens by 2027. The CBDC will be tested in a pilot program between 2023 and 2024. From Russia, we're heading back to the US, where the Government Accountability Office is exploring the potential of blockchain. And if you are as excited about this as we are, don't forget to give us a thumbs up. All right, let's take a look at this. The U.S. Government Accountability Office, or GAO, has been looking into how blockchain technology could be used to improve the oversight of programs run by the Small Business Administration, also known as the SBA. The SBA is all about supporting entrepreneurs and small businesses, and the GAO thinks that blockchain could really help with that. Their report suggests blockchain could make annual reporting more efficient, help secure loans, and track the progress of business development. But the SBA hasn't jumped on the blockchain bandwagon just yet. Even so, experts who contributed to the study believe blockchain could help the SBA tackle some of the challenges it's currently facing. For example, a blockchain-based ledger could speed up the SBA's reporting to Congress, help with collecting data in real time to determine if program participants are eligible, and make program oversight easier. The study looked at 4 SBA programs to see how blockchain technology could be used and what the limitations might be. One of the key findings was that blockchain could help reduce the risk of fraud in the 7A loan program. This is the SBA's main program for providing financial assistance to small businesses. If the information about the 7A loans were stored on a blockchain-based ledger, the details of the loans and the borrowers could be verified by trusted sources. But the technology can't stop lending service providers from committing fraud. The 8A Business Development Program supports small businesses owned and controlled by socially and economically disadvantaged people. This program could use blockchain to collect real-time data. This would help determine if the participants are still eligible. The GAO also highlighted other potential uses for blockchain. It could speed up the application process for the disaster loan program and improve the timeliness of agency reporting for the Small Business Innovation Research and Small Business Technology Transfer programs. Now let's talk about what this might mean for you. Blockchain technology has the potential to revolutionize the way the SBA operates, making it more efficient and transparent. This could be a game changer for small businesses and entrepreneurs who rely on the SBA for support. But it's important to remember that while blockchain has a lot of potential, it's not a magic bullet. It cannot prevent all types of fraud, and it's not going to solve all of the SBA's problems overnight. But it is a step in the right direction, and it's exciting to see the government agencies exploring the potential use of this technology. So what happened? We covered a lot of ground in tonight's episode. Starting with U.S. Senators Lummis and Gillibrand, we discussed their ambitious new crypto oversight bill that could significantly reshape the regulatory landscape for cryptocurrencies in the United States, potentially giving more power to the CFTC and introducing stricter rules for customer asset segregation and risk management. We then moved to Europe, where the ESMA has issued detailed proposals for crypto companies under the MiCA law, aiming to standardize how these firms handle user complaints and manage conflicts of interest. The EU also unveiled its Web4 and virtual world strategy, aiming to foster local Web4 businesses and set global regulatory standards. Back in the US, the Senate Finance Committee is seeking guidance from the crypto industry to better understand and address the tax issues and opportunities that digital assets present, highlighting the ongoing struggle of traditional institutions to keep up with the fast-paced evolution of digital assets. In India, the Reserve Bank's Deputy Governor, Ravi Shankar, voiced concerns about the potential threat of stablecoins to policy sovereignty and the risk of dollarization, while advocating for central bank digital currencies as a more stable solution. In Russia, the Digital Ruble project is moving closer to becoming a reality, with the State Duma passing the Digital Ruble bill. That bill now heads to the Federation Council and then potentially to Putin's desk. Finally, in the US, the Government Accountability Office is exploring how blockchain technology could be used to improve the oversight of programs run by the Small Business Administration, potentially making annual reporting more efficient, securing loans, and tracking the progress of business development. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.